Good morning, everybody. Really quickly, just want to remind everyone Wednesday was a very nice session. But if you know me very well, you know that I still wasn't happy. Where was my high day close? Why wasn't the Russell 2000 closing in the upper end of its intraday range? Same with the Dow Jones Industrial Average. A lot is left still to the imagination, despite the Dow Jones Industrial Average being at new highs, the S&P 500 being near new highs, the Russell 2000 being near new highs, and of course the Nasdaq reworking on its uptrend. Overall, it looks good. Just wish there was more volume. Just wish we would have had a better close on the Russell 2000 Dow Jones Industrial Average. But overall, my long positions rocked. Had an amazing day on Wednesday. Finally, let's get to the long positions because I don't know. Though gains or not, whatever. It's not that big of a deal to me. More importantly, I want to get the asset allocation over quickly because I always seem to forget it. My new long positions today are wage. That's going to be 2% of my account capital. I don't think I can even put that in. I don't think I have that kind of capital lying around if I want to invest in all these names. RCII, 1%. Bosch Ad Signals, 1.5%. Definitely won't be that big for me. JMBA, 0.5%. Could be 1%. You could even make it 2%. It's up to you. It's up to how you define this. I don't define this as a trend following position. I define this as a swing trade, looking to get to those old like March highs, 200-day moving average highs. So two scans, 0.5%, and then HEB and RXII are your typical 0.25%. So first, let's go with the big long position, WAGE. Ho ho ho! If at first you don't succeed, try and try again. Okay, well that's the max I'll try. 3 times. I've seen bounces fail many times in my life. It happens 40% of the time, sometimes 50, sometimes 60% of the time, depending on the market. I've seen 2 bounce attempts fail before. This happens. I've tried oversold swing trades on other stocks and I've had it happen to them also. Normally, though, you don't get a third bounce attempt. However, fortunately, for me, hopefully, it's very rare to get 3 oversold swing trade ideas in a row, especially within 2 weeks, and then see them all fail. Eventually, one sticks. I'm thinking this is the one that probably finally sticks if the market follows through on its move on Wednesday. Me, I'm not giving up on this. I got a great potential reward to risk ratio, so I take it. I'm getting long in wage at 64.95 limit. First cut loss, you could use 63.25. Me, since I'm not going to be able to do a full position, I don't know why I said I've already entered my orders. I didn't get a full 2% of my capital into wage. I think it was right around 1.5%. I will only be using this stop, 62.65. But wage, it's going to work. And if it doesn't work, cut my losses. Like I said, this time it's only 2% position because it lost its max green bop for 5 days yesterday, so it didn't make that scan. So just 2% for Can Slim. RCII, this is not an earnings winner. This is a gap up due to a takeover bid being rejected by Rent-A-Center. And it makes me think that this stock could easily trade back up to its 2016 highs easily, and quite possibly back to its 2015 highs if it just rejects a takeover and it wants a bigger bid, and or they decide to continue as their own entity. Either way, great little setup here. Want to get long, 1236. First cut loss, 1176. Final cut loss, the gap fill at 1141. Nice little trade idea, nice tight pattern, quiet volume leading up to this recent volume surge. That's what I like to see. And then BOCH, this is a weird stock. So as you can see, this consolidation pattern, it's a little erratic, right? It's like a little erratic. But within the longer term picture, it's actually a very nice, quiet consolidation. So it's one of those tricky ones. It's got a small average true range compared to the average true range here from November to March. But within that smaller range, it's quite volatile. But, I really like this chart pattern. I'm going to go ahead and say that. I don't love it, but I really like it. If it had max green bop all the way back to here, I would love it. But it's a thin stock. It can't really seem to follow through. So take a measured position. It's technically 1.5% signal. It's a CAN Slim stock. Was also in the Max Green Bot 5-day scan. Half to 3% to 1.5%. But once again, I'm fully maxed out on all my positions, especially with very few stops triggering. Only 3 stops triggered intraday today for me. 2 stocks hit profit targets. It was an extremely successful Wednesday session for my portfolios. But I'm going to do this for Bosch. Limit 1130. First cut loss 1085. Final cut loss 1075. And that's my final cut loss in the entire position. I did have a final stop here, and I had to split up into thirds. But after all this time of going sideways, if it breaks 1075, I'm not. Get me out. I just want to be out. So Bosch, I like, but whatever. Wage, I like, but whatever. RCII, I like, but whatever. They're not great. If you're looking for something perfect, you don't have it. Market models and Dow Jones Industrial Averages back under a buy signal, but the S&P 500. Russell 2000 remains under a neutral, and by the way, the NASDAQ did revert back to a neutral signal following the follow-through of the 50-day moving average retake, along with the NASDAQ 100 retaking its 50-day moving average. That's confirmation to throw it back into neutral, so all that should be taken into consideration. Then we have Jamba. Jamba showed up on my Green Bot for 20-day scan and my Max Green Bot for 5-day scan. It's not a volatile issue overall, so if you want to do 1% each, if you got the capital and you need to get invested, you can do 1% each for each of those scans for a 2% position. But how I'm treating that, because I don't see this as a trend following position, because there's not. So look at RCII. They're both kind of similar, but if you look at RCII, there's already a series of many higher highs and higher lows. Jamba does not have that. It's only now set a series of higher lows if it moves up from here, and it has not yet set a series of higher highs unless you count this recent breakout here. But still, this would be a series of higher highs. Follow the arrow right there. We break out above this high, we set a series of higher highs, higher lows. But anyway, so whatever you want to do for Jamba, for me, 0.25% for the one BOP scan, 0.25% for the other. Going long, limit order 760, the high of the day. First cut loss 740 right here. Final cut loss, that big price bar right there, that low, 715. Then we got 2 spec trades, HEB. Like this little pattern here, only because our risk is contained. I want to get long, try to get long. It might gap up away from me. I have a feeling this one and the next one I show you is going to gap up from me, and we'll see if I get filled. They're just spec names I have a feeling might run here if the market, like I said, falls through. HEB, want to get long, limit 48. Cut my loss. Moves below 45, that's it. There's no other support to play off of. So it's 48, 45 HEB, 0.25%. It was in my price volume BOP surge scan, and it was basically confirmed in my tertiary scan that just looks for any stock up on BOP, green BOP with above average volume. And then RXII, it shows that it's up 0%, but that's because I actually don't know why, because in Interactive Brokers, whenever I was placing the order, it showed that it was up right around nearly 5% on the day, and it was closing at 69. So I'm sure it has to do with like the 0.6913, 0.6927, 0.694, stuff like that. But either way, even whenever a stock is flat on the day, if there's a volume surge and a BOP surge to confirm, it's still going to make my scans, because I look at any stock up on the day or flat on the day. Once you have a negative 0.01%, that's when my up scans don't see it. But RXII, like I said, above average volume, another BOP surge, crystal clear double bottom support right here. And since there's green BOP back here on this candle, I'm going to go long RXII, limit 69. First cut loss 62. I recommend that be the only one for you. But with this market, if it gets going, I'm willing to give stocks some room to run, especially since it's speculative. 58 cents will be my final stop. Obviously, first profit target, you could use a 200-day moving average. You could use this high here, this gap fill. Getting back on HEB, you could use this recent high here, this recent high here, then this recent high as your profit targets, or the 200-day moving average. It's up to you. It's kind of a fluid situation to me based on how it trades after I get long. But initially, it's always going to be the recent highs, and then only afterwards do I might adjust it lower or higher depending on where the 200-day moving average is. All right, everybody, great luck on Thursday. Futures are up a little bit, but like I said, I trust nothing until I see follow through along with a high day close.